Index funds for beginners. In this video, we have an exciting topic that's perfect for all the beginner investors out there. We'll be diving into the world of index funds, exploring what they are, why they're great for beginners, and how you can get started with them. Let's jump right into it. Segment 1: What are index funds? So, what exactly are index funds? Well, put simply, an index fund is a type of investment fund that aims to track the performance of a specific market index, such as the S&P 500 or the Nasdaq. These indexes represent a broad selection of companies, usually weighted by their market capitalization. By investing in an index fund, you essentially own a tiny piece of all the companies in that index. Index funds are known for their passivity, meaning they're not actively managed by a fund manager. Instead, they aim to replicate the performance of the index they're tracking. This makes them different from actively managed funds, which involve a portfolio manager making decisions on what securities to buy and sell. Segment 2: Advantages of index funds for beginners. Now, let's talk about why index funds are an excellent choice for beginners. There are several advantages. 1. Diversification. With an index fund, you instantly gain exposure to a broad range of companies in a single investment. This diversification helps reduce the risk compared to investing in individual stocks. 2. Low expense ratios. Index funds typically have lower expense ratios than actively managed funds because they require minimal day-to-day management. This means more of your money stays invested, and fees don't eat into your returns. 3. Easy to understand. Index funds are straightforward to understand, making them ideal for those new to investing. You don't need to worry about analyzing individual companies or complex financial statements. 4. Long-term growth. Historically, the stock market has shown a long-term upward trend. By holding onto index funds for the long haul, you have the potential to benefit from overall market growth. Segment 3: How to get started with index funds. Alright, now that we know the benefits, let's explore how you can get started with index funds. 1. Research different index funds. Look into various index funds available in the market. Compare their historical performance, expense ratios, and the indexes they track. Popular indexes include the S&P 500, Dow Jones, and Total Stock Market. 2. Choose a reputable brokerage. To invest in index funds, you'll need a brokerage account. Choose a reputable and user-friendly brokerage platform to open your account. 3. Decide on your investment amount. Determine how much you're comfortable investing in index funds. Remember, it's essential to only invest money you can afford to leave untouched for the long term. 4. Set up automatic contributions. Consistency is key to successful investing. Consider setting up automatic contributions to your index fund account on a regular basis, even if it's a small amount. This practice is known as dollar cost averaging. 5. Rebalance periodically. As the market fluctuates, the allocation of your index fund may shift. It's a good idea to review and rebalance your portfolio periodically to maintain your desired asset allocation. Segment 4: Final thoughts. To wrap things up, index funds are a fantastic option for beginners seeking a low-cost, low-maintenance approach to investing. They provide diversification, simplicity, and the potential for long-term growth. Remember, investing is a long-term journey, so stay patient, stick to your strategy, and avoid making impulsive decisions based on short-term market movements. That's all for today's video. If you found this helpful, give it a thumbs up and share it with your friends. And as always, if you have any questions or want to see more content like this, leave a comment down below. Thanks for watching, and happy investing! Thank you for watching. Please hit the subscribe button so you don't miss any future content. If you have any questions or comments, please let us know in the comments section below.